Okay guys, so we've got a video here of a couple of trades that I've taken to give you a nice couple of examples and case studies of trades which have been taken based on an economic news event. So it is the 23rd of July 2015, and we just had a news event out of the US, and I've taken a couple of trades, a buy trade on dollar yen and a sell trade on pound dollar. So I want to talk you through that process in terms of why I took these particular trades. So let's first of all go to the economic calendar in terms of what the event was that we were trading. So it's this one here, unemployment claims from the US. So it's an employment figure, so very, very important. Let me just refresh the screen so I can show you the actual figure that came in. So as you can see here, we're expecting 279,000 people to be unemployed and claiming benefits in America. Now, we obviously want to see that figure come in lower because fewer people claiming benefits means more people in work. So we wanted a lower figure to be better for the dollar, and it absolutely smashed it. It came in at 255,000 people, so much, much lower, and I believe the lowest since 1970 something. So here's my FX Pro Squawk. US initial jobless claims, week on week, lowest level since November 1973. So an absolutely amazing figure there. Very, very good for the dollar. Remember, we're already very bullish on the US dollar. Why? It's because the bigger picture is that the US is heading towards a rate hike in the not too distant future at some point towards the back end of 2015. So we're heading towards a rate hike, which is bullish for the local currency, which is the dollar. We then had a really good piece of data which supported that. Now, why did I place the dollar against the pound and the yen? Well, firstly, the
FX
pound.
traders, one thing to just bear in mind for next hour.
Just pause that. So the pound was chosen because this morning we had some very, very bad data out the UK. So retail sales from the UK came in at minus 0.2 versus an expected 0.4. So there's a lot of current sentiment around the pound is a little bit negative today. So we got some fresh reasons for people to sell the pound. Now I put it against the dollar because the dollar is really the only pair, the only currency right now that's stronger than the pound. So we've got extreme strength on the dollar off the back of those unemployment claims, and we've got some weakness from the poor retail sales in the UK. So I sold pound dollar. Now on the flip side of that, I bought dollar yen, and this was mainly due to fundamental reasons. So the dollar and the US are heading towards a rate hike, and they have come out of a QE program, so good for the US dollar. Whilst in Japan, they've got QE currently taking place. They've got interest rates at record lows, and they're nowhere near increasing them. So we've got the classic strong versus weak, dollar strong, Japanese on the whole pretty weak. So that was the reason why I selected dollar yen. There was no fresh information from Japan. It was just the fact that the underlying fundamentals, the bigger picture, is very, very bearish for the Japanese yen. So I expect the yen to be much weaker than the dollar, especially now we've had that good data out of the US. So let's go to the charts. So I entered off the back of the news. I got a better entry because I took the pound trade first. Then I went over to the yen, so I got a slightly worse fill on the yen trade. But we are currently up around about 14 pips on dollar yen, and we're up around about 40 pips on the pound dollar. So this will give me the option to move my stop loss to break even. However, as I've mentioned in the course, sometimes from a discretionary basis, I like to bank pips. So if I've got a lot of pips given to me quite quickly, then I'm not too worried about whether I move a stop to break even or whether I hold for the full 80 pips. So I'm gonna just for the example of this video, I'm happy with what I've got now. So we've got 43 pips here, 43 pips, and around about 14 pips on dollar yen, so just over 50 pips. So we can either, you've got your options to either move your stop to break even, or to as we go later down the line, for you to use a bit of discretion. In this particular example, I'm going to use a bit of discretion. It's a nice trade. I'm going to just take that off, close that position down, and then I'm going to close this one down as well. So that's given me a nice little profit, really within the space of half an hour, because I took the trade just after 1:30. It's now 2 o'clock, and I've decided to just bank those. Can they go a little bit further? Absolutely. And with your strategy, you can move your stop loss to break even at the point where your trade goes halfway to your target, which is 40 pips. I could have done that on the pound now, but instead, because I've got nice pips on the table, I just like to take the profit on occasion. Sometimes I'll leave them to run. Sometimes I'll take my profits. In this particular occasion, I've banked my profits, and it's a nice example to show you. So again, going through that just to summarize it, why did I take the trade? Well, I waited for the news to come out. Good dollar news to support the bullish overall picture that we have on the US dollar. I paired it against weaker currencies, of which the Japanese yen was a weak currency, and the pound was weak just today. Just today, because we had some bad retail sales. So I paired the fresh bad data from the UK with the good fresh data from the US to give me a high probability trading opportunity, and that's enabled me to bank just shy of 60 pips, which isn't too bad for half an hour's work. Anyway, I'm going to wrap up there, but hopefully you find the video useful.